Stocks bounce in a recovery attempt. The USD pulls back from fresh two-year tops. Asian equities started the week on a downbeat note amid persistent geopolitical and economic concerns. The Nikkei 225 in Tokyo fell after the Bank of Japan cut its assessment for 8 of 9 Japanese regions in its latest regional economic report, citing the ongoing COVID-19 impact and supply-side constraints. China's Shanghai Composite plunged more than 2.5% as Shanghai reported a record high new case count above 26,000. In Europe, Emmanuel Macron won the first round of the French presidential election with 27.6% of the votes compared to 23.4% for Marine Le Pen. Wall Street stocks also fell in anticipation of the U.S. inflation report. The yield on the benchmark 10-year U.S. Treasury note exceeded 2.8%, its highest since January 2019. The following day, Asian markets extended losses as risk-off tone continued to persist. Japan's Nikkei 225 gave up 1.8% after remarks by Japanese Prime Minister as he once again highlighted the importance of FX stability. The S&P ASX 200 dropped 0.42% after the data showed that the NAB Business Confidence Index for March came in at 16, adding just 3 points. Bucking the trend, Hong Kong's Hang Seng Index reversed early losses to add 0.42%, while China's Shanghai Composite rallied 1.46% after the authorities approved the first batch of new video game licenses in 9 months. European equities closed lower as investors digested U.S. inflation data and looked ahead to the ACB meeting. The Consumer Price Index rose 8.5% in March from a year before, outpacing February's 7.9% print and exceeding expectations. As for the regional economic updates, the jobless rate in the UK fell to its lowest level since 2019, while Germany's March wholesale price index came in at 6.9% versus a gain of 1.7% a month prior. The U.S. stocks ended slightly lower on Tuesday, erasing early gains after the data showed that U.S. inflation rose in March for the fastest annual pace in 40 years. Adding to a more cautious tone in the markets, Fed's Brainerd reiterated that the central bank's readiness to take an aggressive stance against inflation. As a result, the S&P 500 declined 0.34%, the Dow Jones Industrial Average slid 0.26% to 34,220.36, and the technology-heavy Nasdaq Composite fell 0.3%. Asian stock markets were mixed on Wednesday as investors digested Chinese trade data. The USD-dominated exports grew 14.7% year-on-year in March, above expectations for a 13% increase. Imports fell 0.1% year-on-year versus the 8% growth predicted. The Shanghai Composite Index fell 0.82% as new COVID-19 cases in Shanghai topped 26,000. Hong Kong's Hang Seng finished unchanged, Japan's Nikkei 225 rallied nearly 2%, and the S&P ASX 200 in Australia gained 0.34%, despite Australian consumer sentiment slipping for a 5th straight month in April. European shares slipped for a 3rd straight session on Wednesday, with the Pan-European Stock 600 index falling just 0.1%, trading in a tight range ahead of the first quarter earnings season. On the data front, UK employment figures showed that the country's jobless rate falling to its lowest level since 2019. Meanwhile, Wall Street rallied to end higher on Wednesday as investors digested hot inflation data and mixed quarterly results. The Labor Department reported that the surging cost of energy pushed wholesale prices up to a record 11.2% last month from a year earlier. Travel-related companies were among the biggest gainers after Delta reported strong revenue during its first quarter and solid bookings. Delta rose 4.7% and rival American Airlines jumped 8.1%. In individual stocks, JP Morgan fell 3.18% after revealing a sharp 42% drop in profits as it wrote down nearly $1.5 billion in assets, citing higher inflation amid the Russian-Ukrainian conflict. The Dow Jones Industrial Average rose 1.01%, the S&P 500 gained 1.12%, and the Nasdaq Composite rallied 2.03%. The dollar peaked at 100.50 for the first time in 2 years before retreating on Wednesday amid profit-taking as the yield on the 10-year treasuries fell to 2.66% from the levels above 2.80% seen earlier in the week. The USD index fell back below the 100.00 figure to settle around 99.60 earlier on Thursday. As such, the Euro-USD plunged to the 1.0810 area before turning positive on the day. The euro extended the pullback early on Thursday to get back above the 1.0900 ahead of the ECB meeting. The pair could extend recovery later in the day if the central bank delivers a hawkish tone when speculating about its outlook for its monetary policy. Elsewhere, oil prices rallied 6% on Tuesday to get back above $100 a barrel as dip buyers reemerged after a dip towards mid-March lows at the start of the week. Brent crude extended its recovery to the $109 zone that has been capping further gains so far, with prices flirting with the 20 DMA currently at $108. The recent jump in oil prices after Russia's Putin said that peace talks with Ukraine had hit a dead end, blaming Ukraine for derailing negotiations. Adding to supply concerns, Russian oil and gas condensate production fell to below 10 million barrels per day to hit its lowest level in nearly 2 years. Furthermore, OPEC warned that it would be impossible to replace potential supply losses from Russia. The organization also cut its forecast for 2022 global oil demand, citing the impact of the situation surrounding Ukraine. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.